Hey, when you're shopping for a home, a mortgage is one of the biggest decisions that you'll make. Choosing the right mortgage can save you thousands of dollars on the front end and thousands more across the life of your loan. So that's why we brought in 812 Living Group MVP and local mortgage expert Brad C. Brad, thank you for joining us today.
Thanks for having me. Happy to help.
So Brad, what is the best type of mortgage?
That's a very tough question to answer, Mike. There's a lot of options out there. And I think the best type is the one that best suits your needs and your goals.
Yeah, clients ask me from time to time, what is the best mortgage? And the answer is the same. It's the one that's best for you. So let's go through. There are a variety of options, like you said. So let's start with USDA loan. What is a USDA loan? What makes it unique, and who is it good for?
Yeah, so a USDA loan is offered by rural housing. So the U.S. Department of Agriculture. It's considered a rural housing loan. So kind of outside of city limits. They've got a map on their website, which you can probably throw a link into. But if the house qualifies, then you may qualify as well for that. So it is a no money down. Like most government loans, it does have a bit of a funding fee and some small mortgage insurance. It's actually one of the cheaper mortgage insurance options, but it is no money down. There are income guidelines and credit guidelines. I would say as far as income and credit goes, it is the least lenient of the mortgage products. They're generally looking for at least 12 months history with 2 to 3 trade lines on your credit report. You can make too much money. So they're constantly changing these income limits, but there are income limits around how much money you make. If you make, $160,000 a year, you can't qualify for a rural housing loan. So they're constantly updating those, and you can find that information there. That those income limits are by they do them by census tracts and locales, so they're different countrywide. But something to consider. But if you do qualify for a rural housing loan and the no money down, it is an amazing product. We here in Southern Indiana, we have a lot of rural housing. We do a decent amount of rural housing loans. It's a great option, honestly.
Yeah. So USDA, kind of that first filter is the geographic one. Are you willing to live outside of, in our area, New Albany, Clarksville, Jeffersonville, and move out into a more rural setting? That's the first one. If you qualify there, there's some income qualifications. But the key feature with the USDA is the potential for no money down payment for the borrower.
Correct. Yeah. Okay. And there are areas that qualify for rural housing in all of our counties in Southern Indiana. So
yeah. All right. VA loan. What is a VA loan? What is its unique features, and who's it good for?
So like the U.S. Department of Agriculture on the rural housing loan, the VA loan is Veteran Administration. So it is a government loan product. You do have to qualify so there's what's called a certificate of eligibility. So that's what we're looking for to prove that you've had X amount of service or X amount of years active duty or whatever those qualifications may be. But if you are a veteran and you do qualify for a VA loan, you probably know it. And it is the best mortgage option out there. But it is strictly for veterans that have meeting certain qualifications on their service to qualify for that.
Yeah. And what are some of the features of the VA loan that make it great?
Yeah. So just like the rural housing loan, it is no money down. And what makes it a little bit better than the rural housing option is it doesn't have mortgage insurance at all. So, and depending on your service and how long you've been in, you could be, there's a funding fee, but some veterans, if you have a service-connected disability, that funding fee could be waived by the VA for you. So we are approved VA lender. So if you're curious whether you qualify for a VA loan or not, or whether you're exempt or not exempt from that funding fee, we'd be happy to pull that information for you.
Okay. So VA loan, nice benefit for our veterans. FHA loan is the next one on our list. Tell us about that one.
So Federal Housing Administration, FHA loan. A lot of people consider or call this the first time home buyer. I don't know if that's the F and H in the beginning of it, but I think a lot of people misconstrue the first time home buyer with FHA. But FHA is a great loan program for people that, only have a minimal down payment. So let's say they don't qualify for rural housing and they're not a veteran, but they want to get into a house. So you're looking at 3.5% of the purchase price down. The rates are generally pretty low comparatively because that product is backed by the government as well. So there is a funding fee and there is mortgage insurance along with it. But the income and credit qualifications are as lax as any of them. So it's easiest to qualify for an FHA loan versus any other loan product.
Okay. So you don't have a lot of money to put down, but you need some, and your credit score maybe isn't as great, then the FHA loan product may be the one for you.
Yeah, you'll find a lot of lenders will go down to a 580 credit score on FHA. Now that if you have a 580 credit score, there may be some other things going on, but the general guideline is down to 580. And you can even do an FHA below 580, but you got to have 10% down on that one.
Yeah. Okay. So we've gone from zero money down to 3.5% of your purchase price as a down payment. Talk to us about a conventional loan.
So conventional financing is the most popular. It is, there's home ready and home possible products for as little as 3% down on conventional. If you've got decent credit and no real issues in the past. A lot of people do 5% down on conventional all the way up to whatever amount down. But anything less than 20% down on the conventional loan program is going to have mortgage insurance. And that mortgage insurance is going to be based on how much you're putting down and your credit score. Where the previous loan products we talked about, credit score doesn't really have much of a factor on those things. But on conventional credit score and down payment, the more down and the higher your credit score, the less your mortgage insurance is going to be.
Yeah. Okay. So that conventional product, the one that most of my clients think about, is 20% down. That gets them away from the mortgage insurance altogether. Yep. So there are a lot of different options in there for down payment, but 20% is that kind of that magic number that a lot of people think about. So we're going from, you have very little saved, there are products available for you. You have a lot of money saved up, there's a product available for you. So really, these mortgage options cover whether you have a little bit saved or a lot saved, and then there's a variety in there for people to choose from.
Yeah, exactly. And our job as consultants is to look at your your income, your credit, your amount available you have for down payment, give you your options, and then see what option may be best for you. Maybe the FHA is better in this situation than the conventional, depending on your situation. So it's we're educators and providing people the info on what, and let them make an educated decision, honestly.
Well, and so that was my last question. Given all these options, what's the best way for a person to figure out which one's right for them? And the answer is,
get us the info, and then we'll help guide you and walk you through the process and go over what options may be best for you.
Yeah, absolutely. So look, the bottom line is there's no one perfect mortgage type for everyone. And two, there's a lot of options out there. So if you're looking at getting a mortgage for your next home purchase, get with me, get with Brad. We'll help guide you there. Brad, thank you.
I appreciate you having me on today, Mike.